All right, welcome to the Business Rogue Podcast, where we teach you how to think and act like a business rogue. My name is Michael Wita. I'm an incorporation specialist, and I teach you how to get the most out of your corporation or LLC.
And I'm Jeff Kimura. I am a digital marketing specialist, and I teach you how to make a lot of money with your own business.
And what we're going to talk about today is which entity type you should be operating from. And I get this question all the time. Whenever I deal with business owners who are thinking of incorporating, they want to know, should they do a C Corp? Should they do an S Corp? Should they do an LLC? Short answer is I'm a big fan of the LLC. Everyone's situation is different, though. So I would never say you should always do X like a lot of CPAs and a lot of attorneys do. A lot of situations are different. It depends on whether you have a lot of investors, a lot of business partners. It depends on if you're a solopreneur. It depends on how much money you're making. There's all these things that come into that decision. But the short answer is go for the LLC. It's a looser form of a corporation. There is a lot less paperwork. You don't have to document every major action like you do with a corporation. A corporation is funny because you have to document major actions even if it's just you. So you have to have a meeting with yourself, which is a little weird. You have to create corporate resolutions. You have to create meeting minutes. And this is not the case with an LLC. So that's the first reason, is that it's super, super informal. You have an LLC, don't you?
Yeah, I got an LLC, and I think you're the one who told me this, but I have it taxed as an S Corp.
Yes, very good. We'll get into why that should work in a minute. So that brings me to the second reason that LLCs are my favorite entity, and that is that they're the most versatile. You can have an LLC taxed as a sole proprietorship. You can have it taxed as a partnership. You can file a paper with the IRS to have it taxed as an S Corp. And when you start making enough money, you can even file a paper with the IRS to have it taxed as a C Corp. So the legal entity remains an LLC, but you just changed how it's taxed. So you don't have to go shut down your LLC and restart if you need to switch to an S Corp or a C Corp. That's what's really great about the versatility of an LLC.
So I have a question, though, that I've been just kind of thinking about that. If corporate entities really depends on taxes, right? So if that's the case, and then LLCs are easier to manage because you have to do less minutes and all the other stuff too, why doesn't everyone just get an LLC and then just say, tax me as this S Corp or C Corp?
So that's a really great question. The reason is that if you have a lot of investors, and especially if they are strangers, right? You want the formality of a corporation. You want to document everything that you're doing so that if the investors can't question that you're not doing it properly. It gives them as shareholders the opportunity to vote on major decisions you make. Now, you could set your LLC up to require that, but a corporation, you don't even have a choice. You have to do it. The other reason is for the C Corp is that it has a flat tax of 21%. Now, LLCs and S Corps are taxed at the personal rate. So that means it can go all the way up to 37%, the more money that you make. So, I always tell people, start with an LLC or an S Corp because it's progressive. The first a little bit of money you make is taxed at 10%, then 12%, and then it climbs as you make more. So then there becomes a threshold, which is typically around $200,000 a year in profit, that it might make sense to be taxed as a C Corp or to set up a C Corp to take advantage of that 21% flat tax so it doesn't continue to go up to 37%.
Can you get taxed as a C Corp as an LLC?
Absolutely. Yes, you can file a paper to do that. So what's great is that you get to keep the age of the entity, the actual LLC, and you're just telling the IRS, hey, I'm an LLC, but tax me like a C Corp. I want the tax advantages of that C Corp if I start making a lot of money to be able to get that 21% flat tax.
Okay, that makes sense. So then pretty much like from what I'm hearing that is like, okay, if I want to do C Corp, it's because I'm an investor and I want that formality.
There's that, and then also the tax advantage of the flat 21% once you start making enough money.
But you could do the 21% as an LLC too, right?
Yes, but making a decision to be taxed as a C Corp or to set up a C Corp is going to be based on, one of the things that you're going to base it on is the percentage of tax when you start making close to $200,000 of profit each year.
Okay, so me as an LLC taxed as a C Corp versus being a C Corp specifically, I get taxed differently?
We're not saying you get taxed exactly the same. It's your legal structure is different. God, that's what's different.
Okay.
Yes, your legal structure is an LLC. And because you're a solopreneur and you're the only owner or member in your LLC, that's totally fine to have that legal structure.
Got it.
But if you were going to set up a new marketing company where you had a bunch of investors and things like that, it might be better in some cases to just set it up as a C Corp straight away for the legal structure and the tax advantage, right?
Got it.
Yeah.
So, okay. So like taking in consideration that like top 10% businesses actually make $1 million, right?
Mm-hmm.
There's really not a big reason to ever launch as a C Corp, isn't there?
Typically not, no, because you're leaving money on the table as you build up. Another thing LLCs and S Corps have is that if you are in the negative, like most businesses are the first 5 years, you get to write that off on your personal return. So if you have a spouse that's working a W-2 job and your business is in the negative 50,000, you can write that 50,000 off against her income. Or if you're working a job and running a business, like a lot of people have a business as a side hustle, if your business is operating in the red, you can write it off against your W-2 income, which you can't do with a C Corp. So that's why when you first get started, you're more likely to be in the red.
Yeah.
I'm going to take advantage of that. And if you are in the black, your tax rate is lower on the first 50, 12,000, 15,000 is going to be at 10%. Then it goes up to 12.
Yeah.
For the first $40,000, $50,000.
So okay, I'm excited because I just realized something. Like I'm spending a lot of money on coaching right now, and it's putting me in the red. But because I'm an LLC taxed as S Corp, I could count those as losses and actually reduce my tax bracket.
Yes, that's right.
Hell yeah, dude! You got a lot of money. Good. Okay.
Yes, that's correct. You got it.
Okay, I'm excited about that. Are you a S Corp, C Corp? Probably C Corp.
I'm a C Corp, yes.
So we know he has enough.
Yeah.
To get to that point.
Yeah, and it's funny because it's easy to control as a solopreneur where your expenses and your income is coming in. So a C Corp is great when you have either you're close to breaking even or if you're making over 200,000. So those are the two ways that you could do it. People say avoid a C Corp because of double taxation. And what that is that you get taxed at the corporate level, 21%. And then you're supposed to take that excess money at the end of the year and pass it through to the shareholders or send it off to the shareholders where they pay it taxes on those dividends, essentially on the personal level.
Right.
So that's double taxation. There's several ways to limit that. And the first one is to cut yourself a paycheck. And the other one is it's called retained earnings. So let's say at the end of the year, I have $50,000 left over, right? What I can do is call that retained earnings so that if it's reasonable for the type of expenses my business has, I can keep it as retained earnings, meaning you retain it in the corporation, you keep it in the corporation, and you're not forced to pay it out as dividends. But it has to be reasonable. I can't keep $2 million in there if my expenses are only, a few $100,000, right? It has to be reasonable to what you're making and what your expenses are. And there's all kinds of other ways. You see me give the presentation on moving personal expenses over to the company. There's all kinds of ways that you can pull money out through leasing a vehicle, through different types of company benefits where you could pull money out of the company without getting that double taxation.
Let's unravel that a bit. So let's go a little bit deeper. What is the coolest thing you've done with your corporation to where someone would be like, wow, that's something that only really wealthy people know how to do? Or like, wow, how did you figure out how to do that?
There's a lot of stuff from the tax side. It's making paying myself an HRA, which is a health reimbursement arrangement that covers all of my health insurance. It covers any co-pays or deductibles I have to pay. That's a good one in conjunction with having a health savings account and in conjunction with having a solo 401k. So that's all ways that it becomes an expense to the corporation and it acts as a benefit to me on the individual side, but I don't get taxed on it. So I'm making that income go away, even though I'm benefiting from it personally, which is really great. So that's one thing that I've done that's a lot of people flip out on is that, that's essentially getting an additional 80 or 90,000 out of my C Corp without having to pay double taxes on it. And then the other one that's fun is lending money from my corporation to myself as an individual, putting a lien on my house so it protects the equity on the personal side. Right. So those are some of the things that the ultra wealthy do and take advantage of as a benefit. And you could do that with the lien, then you could do with an LLC, you could do it with a corporation because it have to be a C Corp.
I do want to say too, like all you people out there who are saying like always getting around taxes, think about it this way. You get taxed on your income, you get taxed on the things you buy, and then the people that make the money, they also get taxed on that. And so everyone should be looking at how do you actually go and get around these taxes, or actually use the laws that are put in place already to be able to pay less taxes. Like they're designed this way for a reason. If you're not using it this way, like you probably should figure out because
you have run out like when you invest and you get a gain on the investments. Yeah. So you get taxes, you earn your income. So you're investing with after-tax money, right?
Yeah.
Then you earn money on your investments and you have to pay taxes on that if you were to sell and take the gain. So it's tax.
Yep.
So there's just some ways to minimize that tax burden on yourself.
Yeah. And I think because it's a percentage of your gains, like some people are okay with it, but it's like, dude, like that's so much money. Like I was looking at all the money I've made in my career so far, was like 10 to 15 years. Like I'm pretty old now. I'm over 30. If I didn't get taxed so heavily on my income, I would easily be a millionaire right now.
Mm-hmm.
But because I've been taxed so heavily, I'm just like, all right, please Bitcoin pop off. Yeah.
Yes. But let's talk about, you brought up that you have your LLC taxed as an S corp. Mm-hmm. So I'm curious to know, did your CPA say that's what you should do and you just did it without asking questions, or do you know why that was a good move? Most people don't know why it's a good move, so I want to see if you were able to pick it up.
And I think you're the one who did tell me to actually do it. So pretty much I was just following orders. But I do understand the importance of it because I can pass through the losses or the gains or whatever through my personal income and change my tax bracket accordingly. Or at least that's my understanding of it.
That's a big piece. There's a second piece too, and that is it gives you control over FICA taxes. FICA taxes are Social Security and Medicare. It's 15.3% of your income. So if you're just an LLC as a solopreneur, you're getting taxed as a sole proprietorship. That means every dollar of profit you make, you're paying an additional 15.3% on top of the income taxes that you're paying to both the state and the feds, right?
Yeah.
So if you have your LLC taxed as an S corp, you can take a portion of the profit of your business through the form of a paycheck. And so what happens is you can reduce the payroll taxes. You're only paying payroll taxes on the paycheck you give yourself, and the rest is just qualified business income, and that's tax advantage. So you can avoid paying the 15.3% on the remainder of that money. So that's the second big reason is to control the payroll taxes that you're paying.
Gotcha. Okay, so FICA, that's a big piece that you get around.
Yes, that's right. And people say, well, what about Social Security? We've talked about this before. Hey, if I'm limiting what I'm paying into Social Security, aren't I screwing myself in retirement? And, there are all these articles right now saying that something will have to change with Social Security because people are living too long and there's not enough people paying into the system where Social Security is running out of money. So they say at some point after 2033, they're going to have to either change the retirement age, increase it, or do something so that it doesn't run out.
Yeah.
Extra benefits don't go. But anyway, Social Security, as we've said in other episodes, the business rogue way is to say, screw putting money into Social Security because A, I don't believe it's going to be around.
Yeah.
And B, I think I can invest my money better than the government can, right? So people who make that decision, you have to be responsible. If you're not responsible or if someone's not responsible in allocating that money over to investments or to retirement, maybe they should go the Social Security route. But as a business rogue, you've got that handled. You've got that on log. So we need to reduce what we put into Social Security and invest it because we're going to do it better than the government can. And that's going to result in more dollars for us after we retire anyway.
And honestly, like if you think about it, Social Security, when you get out of it versus if you just threw your money in an index fund, you probably beat them anyways, right?
Yes, that's right.
Like, exactly. Like it's so easy to beat Social Security.
Yes.
And that's the thing too, like the politicians, they're using Social Security as a personal piggy bank, like to fund a lot of things that they're doing.
They're borrowing against it and they're taxing us on Social Security when we pull it out. We didn't used to, but now they tax us on it.
Oh, really? I didn't know that.
Yep, another tax.
What I heard, like if it is even still around, you will be getting a fraction of what you should actually be getting.
That's right. Yes, exactly right.
So it's like, what's the point of it?
Yeah, you got it.
Like they think, first of all, they think they're smarter than us at investing and taking care of money, so they take our money.
Mm-hmm.
And then after that, then they tax us on it. And then after that, they use it for whatever they want to do, whatever like program they want to put together and fund billions of dollars. Mm-hmm. And then we actually end up getting less anyway. So like, what's the point? How does that work out?
Exactly. That's why the business rogue way is to avoid putting money into Social Security if you can.
Yeah.
But yeah, so to recap, the LLC is, I think, the better option for most. entrepreneurs, especially if you're a solopreneur, don't take this as gospel. Have a conversation with your CPA or call one of us. Have a conversation with an expert to make sure, because everyone's situation is unique and there's different things that come into play.
Mm-hmm.
But in general, LLCs are great because you can choose all the different ways that you want to be taxed. It's still an LLC on the legal side, but you could choose to be taxed as an S Corp, a C Corp, a sole proprietorship, or a partnership based on what works best for you. And the second one is that it's less formal. There's less paperwork. You don't have to document every major action. So 2 major reasons that an LLC is the way to go. And talk to your CPA about having your LLC taxed as an S Corp if you're making less than $200,000 of profit, because you'll be able to take control of those payroll taxes.
Right.
So that's the real deal with LLCs. That's my short answer to which entity should I form, and that's the business rogue entity is LLCs.
I have one question for you, though.
Mm-hmm.
It seems like you have a lot of good information, very helpful, can help people a lot. So why do CPAs hate you so much?
CPAs don't like it when non-CPAs know the information that they're supposed to know. And what happens is I make them work harder, because when I give people all these tax write-offs that they can choose for their businesses that their CPA isn't telling them about it makes the CPA work harder. And that's the thing, is if you have a CPA and you need a referral, hit us up, because you need a CPA that does at least 50% of their business in business tax returns, not W-2s, right? And you need a CPA that's not just going to copy last year's returns. They're going to look at how much money you made this year. They're going to look at your tax situation individually and say, okay, you made too much money. Now we need to start taking advantage of these tax breaks or these deductions. And most CPAs don't do that. And that's why they get mad when they say, this business consultant told me I should be doing this. And it makes the CPA look bad. And they go, oh, he doesn't know what he's talking about. So I usually end up doing a conference call with them, and I'm polite to the CPA and say, well, if they do this, this, and this, doesn't it make it okay? Well, yeah, if you do it that way.
Yeah,
They're not a fan.
so at the end of the day, you want a CPA that actually works for you instead of just copy and pasting until you take out your money.
That's it. If you need a recommendation, send us a message and we'll hook you up with a couple CPAs on our team that are really good.
Awesome. Well, I'll say LLC has been a great decision for me. It's been working all this time. So
very good.
Appreciate your help.
All right. Love it.